Hi everyone, Marco Schwartz here, and I hope you are doing well. In this video, I wanted to share with you the interview that I recently made with Gustas from EvoEstate. He's a CEO there, and we talked about his platform and why it is really different from other crowdfunding platforms that you can find out there. So if you don't know, EvoEstate is a platform that allows you to invest in many platforms actually from a single interface. That's quite interesting if you want to invest in real estate crowdfunding, but instantly diversify your portfolio by investing, as I said, in many projects on many platforms, but from a single interface. So that's what really interested me about EvoEstate. I wanted to learn more, and I wanted to do this interview to share that with you. So I asked him about the platform, about what are their plans for the future, and also what he thinks about the whole field of trend lending and where it's going in the future. So without any further ado, let's go right into the interview that I had with Gustas, with the CEO of EvoEstate. Yeah, awesome. So to start, could you just introduce your company and tell us what you do exactly?
Yeah, hi. My name is Gustas. I'm co-founder of EvoEstate. EvoEstate is real estate investments aggregator. So we aggregate platforms by allowing investors from a single account invest across 19 major European real estate crowdfunding platforms.
Okay, awesome. So yeah, what would you say you are? How are you actually different from from other platforms, or especially what gave you the idea to start this aggregator different platforms?
So the idea came in a rather simple way. So together with others, we've been investing for 6 years in real estate crowdfunding, and what we noticed that even the large platforms, they are regional, meaning that they only do deals in 1 or 2 countries and they don't go abroad. And we found it, and because we wanted to diversify, we found it very hard to do that because you had to sign up at multiple platforms, which is a very time-consuming process. And then, at the end of the day, how many platforms can you actually join if you really want to manage your investments well? So this is when we had this idea, like, how could we simplify it? Why don't we make an aggregator so that investor could come and sign up and invest all across the different platforms? So that was how we founded it. Then fast forward 2 years to today, and EvoEstate today, I think, how is it different from the rest of the industry is that, first of all, we are a marketplace. So we aren't a platform, meaning that we aggregate deals and we do not originate deals ourselves. As addition to that, we also have a secondary market, but different to the individual platforms, ours is really liquid. Some people can say, oh, this is just a statement. This is like a marketing message. How can it be more liquid than the originator? Well, if you look from the logical perspective, it's rather simple. The originator, when he funds the deal, he funds 100% of it, meaning that if some investors will want to sell it, the number of investors will be higher who are trying to sell, but the potential buyers number could be actually very small, just because if originator does a deal one or two deals a month, meaning that all of its investors invest in that deal. And with us, it's not the case. So basically, we usually fund between 10 and 40% of the deal. So for the originator, so basically what happens is that even on our end, because we offer 20 to 30 projects per month, investors have a much greater on their investments. So that's another point for us. And then, and I think that another aspect of it also sets us apart is that we have skin in the game. So as I told earlier, we have been investing before, and we said, okay, if we are sure about what we're doing, we should have skin in the game. So together with my co-founder Odris, we invest alongside our investors.
Okay, yeah, great. So I wanted to ask you now more questions about the field in general, about real estate crowdfunding and peer-to-peer lending in general. So you say it's like more different, more classical investments, right? Because people can do many things with their money, right? They could invest in real estate themselves, in the stock market as well. Why do you think they should actually choose real estate crowdfunding?
I think generally there is no such thing when to say something is better or worse. I think each investment type, asset class is made for an individual type of the investor. Especially if we narrow it down a bit to real estate, I would say that there are 4 or 5 different ways on how to invest in real estate. So the first is the obvious, buying the actual real estate. The problem with this is that you have to have a lot of money. Even especially if you're buying without a mortgage, but even if you're buying with a mortgage, depending on the country, you have to pay 30 to 50% down payment. So how many properties can you buy? And then the answer, and then another question which one should ask, like when you have only one property, or like let's say a couple of properties, you have great tenant risk exposure. So meaning that if you don't have a tenant, your investment will not generate cash, and actual property requires maintenance. The second option is real estate investment trusts, publicly traded assets. I could see this is a great asset class for someone who wants to invest in real estate, and in some cases it's much more competitive than real estate crowdfunding. But there's no such perfect thing, as I explained earlier. I think the 2 main drawbacks with real estate investment trusts is that first is that they are exposed to price volatility, meaning that they have direct correlation with the stock markets. So if stock market goes down, the real estate investment trust loses value. And that may not be the case with actual real estate. The underlying real estate could be 100% rented, and it would generate the same income, but somehow suddenly it would lose value. So there is this problem. And then the second one, of course, is the high transactional cost. So this is one element that people should consider. So basically, now in Europe, we have Revolut, where you can make trades for free. But the problem is they don't offer ETFs and they don't offer REITs. So if you want to buy a REIT, you have to go to a broker, like let's say Interactive Broker, because a lot of those smaller brokers, they are not available across all EU states. So like, let's pick an example of Interactive Brokers. So Interactive Brokers charges, I think, now I put myself in an example, direct company, and I'm afraid I don't know the exact price. I can tell how much.
No, but I can jump in. I'm actually investing with them as well. I think if you do some trades, it's actually quite cheap, so you don't have any monthly fees, right? But the thing is, from what I remember, you need 10,000 euros to open the account.
It's actually, no?
This, I think, was a problem for a lot of people, right? Because it's a lot of money, right, to just get started. So
that's also the case, the high minimum. And then another one is that every time you place a trade on a public traded asset, you have minimum fee. So although it's written like, let's say 0.2%, but in reality is that the minimum trade is $10. So if you want to, like, let's say buy REITs, 100, 200 euros worth of them every month, like you call them for 10 years to actually make a good return after you buy them and then you sell them, because every time you at the entry and at the exit you will have fees. So there is this another element. The third investment type is real estate funds, private funds. Great vehicle for investment. If the fund managers are experienced, they will bring much higher return, probably more than in all the other investment types, except the ones where you could really leverage the property yourself. But then again, this requires a lot of skills. So private investment funds, they have another drawback, that they usually have 125K minimum requirements as a starting point. So they go to 500,000, 1 million, 2 million, just as an entry ticket. So then again, this is an expensive investment type. And then, we have real estate crowdfunding. It is good, but it's not perfect, like any other investment type. I think the benefit here is that you can easily diversify. I think you have much greater transparency over your investment. In a lot of cases, you still have better liquidity than other assets, of course, except real estate investment trust, which is traded on public markets. But besides that, you have better liquidity. Choosing the marketplace or a platform where you have secondary market And I think it also allows you better diversification. Again, like you don't have those high fees while buying real estate investment trusts. So in that regard, I think it's much more accessible. It's more transparent. Maybe returns might be lower than the compared to the other. Entry barriers are much lower.
Yep. Yeah. Thank you for this. That was a nice overview of all investment types. Actually, very nice.
My pleasure.
I want to dive a bit more into real estate crowdfunding, and I want to ask you a question that I actually asked to all my guests on this show. So let's say I invest in some house myself, right? I pay a deposit, for example, and I get a loan. I can actually see and touch the house, right? I can go there, I can go inside, I can see, I can do stuff on it myself. The thing is with real estate crowdfunding, you invest like online, right? Probably most people will never see the properties that they invest in. So the question that a lot of people ask before they actually get into real estate crowdfunding is that what actually guarantees me that I will see one day some money back, right? So either by the sale of the property, or by the final interest in the loan, right? Or the rent if the property is rented. So how do I make sure that money will actually come back for a first-time investor, right?
Yeah. Marco, you can never be sure. Let's start with this. This is investment. If you invest money, you should be willing to lose some money.
Of course.
I think it's a wrong approach to, say I will invest and I will not lose money. The investments carry risk, and before investing, you should understand the risks involved. Where real estate crowdfunding comes handy is that a lot of loans are secured with the real estate mortgage. Meaning, what does it mean? It means that the loan value, when it's issued, the property is pledged against the loan. Meaning that when a borrower is unable to fulfill their financial obligations, the originator has the right to exercise the repossession of the asset, and mortgage allows it to make it easier. As addition to that, mortgage also prevents the borrower selling it to some third parties or somehow trying to defraud the investors. So I think you have real estate collateral in a lot of cases. This is helpful. In other cases, it's tied to cash flow. We have to analyze each deal individually, but I think that real estate collateral is the best thing one can have because it's an actual asset. Like you say, and we can organize, a visit to the property. If usually like this is the case that the big investors sometimes locally they want to go and check or they want to talk with the borrower, and this is standard procedure. So I would say that you still have this possibility. I'm not saying a right, but a possibility to see the asset. So when you have a mortgage, which is or you have a loan backed by real estate collateral, I believe that this is one of the best securities you can have because it's a physical asset. It's not some sort of buyback guarantee, which is based like on a promise, whether you or not. So I believe that in that regard, it's relatively safer to invest rather than looking at other methods.
Okay. Yeah. Nice. So that was more like about the field in general. So now I actually asked my audience to come up with some questions specifically for your company. The first one is so you work with some partner platforms, right? So you have deals with some platforms. How do you actually make the selection for those platforms? Is that all the one that said yes? Is that carefully picked? So some wanted, let's say some platform wanted to be on EvoEstate, but how did that work?
I think that like initially, we naturally when we started, we handpicked the platforms which we wanted to have, and we worked on having them. Later on in this progress, we were looking at the market and we were looking at the platforms. How can they complement our marketplace? So basically, to understand like why do you have certain originators is that our approach is that although EvoEstate is an aggregator, like we believe that it shouldn't be a product or a tool where it's like everything is in all. like this is not our vision. I think our vision is, and where we had personal experiences which led to creating EvoEstate, is that we believe that the access to these niche nice platforms, which may not be your like top destination, should be aggregated. So this was the approach, and we wanted to create a full investment environment where we have three investment types. So rent, like buy-to-let investments, fixed interest loans, and we have profit participatory loans, or so-called equity investments. That you could build a fully diversified real estate crowdfunding portfolio, which would include multiple countries. At the time of being, our general list of projects includes 15 countries.
Okay.
Projects in 15 countries, one in the US. So this was general approach. How do we assess partners? So we look at multiple things. So one thing that we care is the track record. We really care about the people behind. We analyze the licenses of the platforms. We analyze how they structure the deals. So basically, what are the securities are being used? How do they structure mortgages? Are they first rank? And then, we measure also external factors, which, for instance, is like our risk scoring model is based at companies which are backed by venture capital or private equity firms, or some corporations like publicly traded corporations like banks. They reduce the risk of the platform because they have large stakeholders, deep pockets, meaning that they do their own due diligence, and if it would go under, they would be willing to invest more.
I see. Okay, nice. Yeah, the second question is actually about something you just said. Let's say somebody invests via EvoEstate on one property, and it goes bad, right? It's like the loan for the default goes to default, and the money can be recovered. Are you actually kind of responsible to investors about this particular project, or it's all on the partner platform?
Marco, like if someone is not paying the loan, the one who's responsible is the borrower.
Of course.
We first.
Of course, I'm just telling you directly the question from my audience, right?
So naturally, the first one who's in line to be responsible is the borrower.
Yeah,
so we trust our originators that they are doing a good work working with their borrowers, and they would find a solution. So either they will start exercising the repossession right via mortgage, they will come up with scenarios such as extending the loan term and others. At the end of the day, we trust the deal originator who structured the deal. So we, as EvoEstate, our role in this process is to make sure that our investors are treated fairly, meaning that in case there would be a default, our investors would not be getting paid last. This is our goal. If someone will be getting paid, we want to be paid equally. So ensure the same rights. This is number one thing. The second is that everything would be done in a correct way. If we see that something would not be right, we would naturally begin, legal process, or working on a solution that would ensure the fair rights. So this is our role. At the end of the day, the one who is responsible is the borrower, and we trust that the originator is doing the right work.
Yeah. It made me think about some other maybe question here related to that. Do you actually, let's say you have a partner platform, right? Do you actually put all of their deals on your platform, or you actually do another selection before putting the deals on your platform?
So basically, the way how EvoEstate works is that we, what we have is that we have risk scoring. So we provide our investors with an overview of the risk of the project, meaning that it's more like a informative nature. So meaning that this is not an ultimate guide of how to make a good investment. It's not its point. The main point is that while we work with so many countries and different partners and different types of deals, we just look at very data-driven risk scoring So basically what we do, we analyze the stage of the project. So basically the common sense is that the earlier stage of the development, the higher risk there is. This is one example. Another thing which we analyze, which is also purely factual data based on numbers, is the financial cost. Financial cost means that what is the borrower is paying as an interest plus the originator's fee. We analyze what is the profitability of the project, like EBITDA margin. So basically, the higher the EBITDA margin is, the more place there is to drop the prices and repay the loan. So these are some short overviews. So essentially what we do with risk scoring is that we give an insight about the risk. As for ourselves, we decide whether it's a skin in the game project or not. What it stands for is that me and my co-founder, we would invest around 2,000 euros in one of these deals, and the others we would still invest, but we would invest less, like let's say 50 or 100 euros. In general sense, all of the deals come onto the platform, except in very rare cases where the risk scoring hits the letter.
Mm-hmm.
So when it's a deal letter, it usually doesn't reach the marketplace. And there's also some situations, like if we look in a very careful detail, is that sometimes you have projects which are funded in 3 minutes. So if they are funded in 3 minutes, they usually don't make the platform because the originator is auto investor, other features, they just fund the project. But these are very rare cases. In both options, these are very, very rare cases. At the end of the day, we trust the work of our partner platforms.
Okay, great. That was for the audience questions. So now I want to talk to you a bit more about the field of crowdlending and where it is going, and also related to your company. So where do you actually see the whole field of this crowdlending, peer-to-peer lending going in the coming years, in terms of maybe safety, regulations, new platforms, new features? Right?
I think that generally, if we look at the market, I think that it will grow significantly over the coming 2 to 3 years. We will see a big growth in various types of crowdfunding. Besides real estate crowdfunding, we will see new markets. For instance, Portugal doesn't have platforms. All Eastern Bloc doesn't have. All Eastern Europe doesn't have platforms, and but I'm speaking a broader sense. Poland, for instance, also doesn't have, which is a big market. So I think that these markets will open up. The number of platforms will grow for the next 2-3 years, and then I believe the market will consolidate. This is my assumption. I believe that generally this market in 5 years will be filled with mergers and acquisitions, because some of them will be very big and will want to expand in those new markets. So the easier way in a lot of cases will be to acquire the platform. And I think that looking from the loans perspective, I believe that there is going to be really interesting business models coming up. What we're seeing today is that more and more companies are considering launching the solar energy crowdfunding platforms. Mm-hmm. Also, I don't know if you are aware about this platform, but it's called Masterworks. It's in the US and it's used for art investing. So we are seeing some similar cases coming up in Europe as well. So I think we will see a lot more interesting models, because when you think about today, if you want to launch a real estate crowdfunding platform, why would you want to do that? Like generally, there's a lot of them, except you are tapping into some interesting niche where someone isn't covering, or you want to cover a new country. So these are the two options. But if you want to launch it just because it's cool, or it looks like a nice business, like I can tell you, it's a very hard business, and I think maybe there are some more easier business than real estate crowdfunding. And regarding the market environment, I think one thing will change is that I think that I don't know if you're familiar with this concept of early adopters.
Sure.
It was written in this book, Innovators. Basically, when you have product adaptation cycle, at the beginning you have early adopters, the influencers, and only then it reaches the broad critical masses. So I think like where we are today, I think we're still in this early adopter stage, at the late stage of it, and in the upcoming 2 years, we are going to move more into the larger, broader scale of the consumers. So then I believe that there will be a problem of supply, that basically there will be a limited number of projects. And I think what the platforms will do, they will gradually begin lowering interest, but not to make a higher margin, but just to attract different types of clients. Because the now platforms are operating in this level where non-banking lenders lend, or they don't lend at that risk level. So basically, I believe that the risk will be reduced, the returns will be reduced, and hopefully, the platforms will start working on larger deals, which are safer. Of course, there's risk exposure of one deal, which is a platform reputational risk possibility, but the larger deals are, I think that where the platforms can have good risk reward ratio. And we are seeing this today with a couple of our originators who specifically focus on larger deals. So meaning that something about 1.5 million, 2 million, 3 million euros. So I think the industry will go more into that direction.
Okay, awesome. And a follow-up question, so to say, can you share a bit about maybe future plans for your company, for EvoEstate, in the coming years?
Yeah, so I think that what we've done up to this point, we've been building the whole product in the way of how Google builds products, is that they launch the product very fast, new features, and then they adapt them along the process. And I believe that where we see platform today is that it's, I think that in terms of features, it reached something around 80%. And now, this the rest 20% will be harder to make than the other 80%. So now we are taking a closer look at what we built, and we are improving everything. So in the coming quarter, we will have a full platform update, meaning that it will be full interface, full design. We will add new features, which will bring us a few percent up to the completion. And we will focus on these small elements. And I think that we will just continue what we have been doing until this point, because we see that it's kind of working until today. So we expect that this will continue to work.
Awesome. So before we actually finish already, can you tell us a bit more about the team behind EvoEstate?
Sure. So I'm the CEO. Odris is CIO, Chief Investment Officer, but the titles in a company which has 10 employees doesn't really make big of a difference, to be frank with you. But both of us, we are serial entrepreneurs. We have 3 tech exits. We have raised venture capital in the past. I myself, I'm licensed investment advisor for MiFID II regulations. So basically the ones that apply for investment brokers. We are also backed by a leading venture capital firm called Startup Wise Guys. They have been very active in crowdfunding space. They have invested in Estate Guru. I think this, this name.
Sure.
And then Investly. It's a British business lending platform.
Yeah.
So we also have some other, of course, investors, including VC, but I think this one really stands out. And I think that, and then our community manager, I think, is also worth introducing, Adrian. He has written an ebook in Romanian about P2P investments. So that's quite an interesting
Okay. Nice.
fact.
Yep. Yep.
But yeah, that's our team. Thank
Okay.
you.
Okay. So yeah, what are actually the best ways for someone that want to check more about EvoEstate? What the best way to get more information about you and also get started?
So, if you want to learn something, you just have to ask. We are very open in terms of communication. Our emails are written on our website or LinkedIn profile. So if anyone wants to discuss anything with us personally, they can feel free to reach out to us. We also have a Telegram group. I can share this link. Maybe you will want to include this underneath the video so people can ask other investors. And then, of course, we have our EvoEstate blog, where we try to share some interesting information either about real estate investments or crowdfunding or general investment risk, and we give periodical updates. So I think that one option is to talk with others. Second option is to read on our blog. And I think that other bloggers and affiliates are doing a good work covering us. So you can find more information there.
Okay, awesome. For sure, I will put all the links just below the video and also the podcast notes. So thank you so much again for coming to the show. I think it was really interesting and I'm sure people will love it. So yeah, thank you again.
Thank you, Marco. Thank you for having me.
Alright, this is already the end of this interview that I had with Gustas from EvoEstate. I really hope that you enjoyed it and that it was useful for you. If you want to learn more about the platform, about what they are doing, about what are the current deals that you can invest in from the platform, you can just follow the link that I put below the video and you will go directly to the website of EvoEstate. If you have any questions about this interview, about the field of real estate crowdfunding in general, don't hesitate to leave them just below the video. That being said, thank you again for watching and I will see you in the next video.